Robbit and Bullpig Native Browser AI Analysis, FNDX. Based on the summary data visible in your active Bullpig and Robbit tabs, here is the high-level analysis for FNDX, Schwab Fundamental U.S. Large Company ETF. The Robbit score of -13 is a severe bearish signal. This is one of the lowest efficiency scores possible, indicating that the fund's fundamental strategy is currently broken relative to the market environment. 1. Strategic Analysis, Robbit tab. The metric, forward return/risk optimized. The gap, optimized model, ETIF, 64.36%, Robbit. FNDX, actual, 45.77%, Robbit. The diagnosis. There's a massive, approximately 18.6% efficiency gap. The fund's methodology, weighting by sales/cash flow rather than growth potential, is structurally underperforming the AI's optimized risk/reward profile. You are taking on more risk for significantly less return. 2. Tactical Analysis, Bullpig tab. The metric, factor return, momentum. The gap, optimized factors, 23.96%, Bullpig. FNDX actual, 9.82%, Bullpig. The diagnosis. This is where the pain is felt most. The fund is dead money, lagging the tactical signal by approximately 14.14%. While the optimized model captures the market's upside, likely via tech/growth, FNDX is anchored to slower-moving value stocks that aren't participating in the rally. Conclusion. The value trap. The -13 score combined with these double-digit performance gaps confirms that FNDX is a value trap. The problem: the fund is fighting the market trend. Its refusal to own expensive but growing stocks is costing you over 14% in tactical returns. The recommendation: the data strongly suggests exiting this fund. The smart money is finding alpha elsewhere, likely in the specific unit basket winners like GS-CAT, AAPL, identified in the previous analysis, rather than this broad fundamental index. Robbit and Bullpig Native Browser AI Metrics Table Analysis, FNDX. Based on the metrics table visible in your active Bullpig screenshot and the background Robbit tab, here is the detailed analysis for FNDX, Schwab Fundamental U.S. Large Company ETF. These tables serve as the statistical proof for the fund's severe -13 bearish rating, quantifying exactly how often and by how much it fails to keep up with the AI's models. 1. Tactical Metrics, Bullpig tab, active screen. Focus, short-term momentum and factor capture. Source, metrics table and screenshot. This table measures how the fund performs against the AI's tactical smart money signal. Metric, value, what it means, positive excess return periods, 92.38%. The daily drag, in roughly 92 out of 100 periods, the AI's tactical model beat FNDX. This shows a staggering lack of agility. The fund is losing to the smart money almost every single day. Average excess return, 7.35. The performance gap. On average, the fund trails the tactical model by 7.35%. While the model captures the market's upside, likely via tech/growth, FNDX's fundamental weighting acts as an anchor, creating this massive performance deficit. Maximum excess return, 14.51. The missed rally. At the widest gap, the fund missed out on 14.51% of gains compared to the model. This typically occurs during strong market rallies where value stocks, which FNDX holds, get left behind by growth sectors. Median excess return, 6.69. The standard loss. Even in a typical median scenario, you are losing nearly 6.7% in potential returns by holding this fund instead of the optimized basket. Tactical verdict. The fund is a dead weight. It fails to capture upside momentum 92% of the time, costing you approximately 7% on average. 2. Strategic metrics. Robbit tab background. Focus. Long-term structural efficiency. Source. Background tab data. This table compares the fund's structure against the AI's optimized style benchmark. Metric. Value. What it means. Positive excess return periods. 98.27%. The certainty of failure. This is the most damning stat. In over 98 out of 100 periods, the optimized strategy beat the fund. It is statistically nearly impossible for FNDX's fundamental strategy to win in this environment. Average excess return, 8.23 pp. The structural tax. Structurally, the fund's methodology costs you 8.23 percentage points annually compared to the optimized model. This is a massive destruction of value caused by weighting companies by sales/cash flow rather than future growth potential. Lifetime excess return, 18.59 pp. The long-term cost. Over the lifetime of the analysis, the efficiency gap has widened to nearly 19%. Strategic verdict. The fund is structurally broken. It fails 98% of the time and trails by a massive margin, 8.2%. Final conclusion. The metrics tables explain why FNDX has such a low score, -13. Tactically, you missed the market speed, trailing by approximately 7.35%. Strategically, you are fighting the market structure, trailing by approximately 8.23%. Recommendation. The data mathematically confirms that FNDX is a value trap. The AI strongly suggests exiting this fund in favor of the concentrated unit basket, e.g., GS, CAT, AAPL, to recapture the double-digit returns you are currently forfeiting.